you're unsure how much term life insurance you actually need, you're not alone. The truth is, the amount you need changes based on your income, debts, and even your life stage. And getting it wrong could leave your family unprotected or cost you more than you would ever have planned to pay in the first place. In this video, I'll show you exactly calculate the right amount of term life insurance at every stage of your life. That way you can protect your loved ones without overpaying for life insurance. Now, before we get into this, let's explain very quickly what term life insurance is, how it works, and whether or not you need it in the first place. Term life insurance is basically a type of coverage that pays out a fixed amount of money to your chosen beneficiary if you were to pass away during a set period of time, usually in increments of 10, 20, or 30 years. It's designed to protect your family during the years where they rely on your income the most. Unlike other whole life policies or other permanent policies, term insurance doesn't build cash value, and it isn't meant to last forever. That's of course what actually makes it so affordable in the first place. You're basically paying for straightforward protection without anything extra. If you outlive the term, the policy ends and you stop paying premiums. Honestly, one of the most cost-effective ways to secure your family's financial future. Now, the first place that will look is in your 20s. When you're in your 20s, you might not have a mortgage, a house, assets, kids, or really anything that would hold you down. But believe it or not, this might be the best time to lock in affordable term coverage while you're still young and of course healthy. At this stage, you can start with about 8 to 10 times your annual income to replace lost earnings and give your future family or dependents a financial cushion. Basically, just look at the current number that you make and multiply it by 8 to 10 times. That's the number that you'll probably need life insurance for. Even if no one depends on you right now, that could change very quickly, God forbid. And term insurance is actually probably the cheapest when you buy it early. You're basically setting a foundation that can be built on later without needing to requalify at a higher premium. By your 30s, your financial responsibilities usually grow quite a bit. Maybe you've bought a house, started a family, or taken on student loans. This is the point where you really need to add much more than just an income replacement. On top of that 8 to 10 times your salary, make sure to factor in any outstanding debts that you have, like a mortgage, plus future expenses like college funding for your kids. One of the best ways to think about this is not just protecting your income, but more so like you're protecting their long-term goals that you have. And it's really easy to do this. All you have to do is basically bolt on a second term policy or even adjust your existing coverage to reflect your updated financial picture. Now, when you're in your 40s, a good starting point is that 8 to 10 times number of your annual income. But at that stage, it's much smarter to align your coverage with any major financial responsibilities that you have. Let's say you make $100,000 a year and still have 20 years left on your mortgage and 10 to 15 years until your kids are out of college. Instead of just $1 million policy, you could basically ladder two policies together. For example, a $500,000 policy for 10 years and a $250,000 policy for 20 years. This setup might cost less than one big long-term policy and still cover your main financial risks. You're not just buying insurance with this, you're actually timing your coverage around your biggest expenses. Now, when you're in your 50s, your income may be a lot higher, but your coverage needs often go down quite a bit. If your kids are financially independent and your home is nearly paid off, you might only need 5 to 7 times your income at this point. For someone making $120,000 a year, that's about $600,000 to about $840,000. But again, you can always scale this down. A $250,000 policy for 10 years could be enough to protect your spouse or cover any remaining debt without overspending on premiums. When you're in your 60s, most people no longer actually need a full income replacement, especially if you've built up retirement savings and paid off all your major debts, or you don't have dependents relying on you. Honestly, at this point, you might just need a small $50,000 to $150,000 policy to help cover final expenses or ultimately leave something behind. At this point, it's really not about the actual big payouts, and it's more just about having peace of mind. Now, for the vast majority of people, term life insurance is going to be the smarter financial choice just because of how simple, affordable, and of course designed to cover you for the amount of years it is, especially during times in your life where your family needs that protection the most. Whole life insurance is often marketed as a way to build cash value, but the higher premiums can hold you back from investing that money elsewhere. honestly, when you run the numbers, buying term and investing the difference in a Roth IRA or an index fund usually results in far better returns. Term really does one job, which is protecting your income, and it does it cost effectively. That's why it's the default recommendation for most working families out there. Anytime your life shifts in a major way, like getting married, having a child, buying a home, or even starting a business, it's time to really reevaluate your term insurance. These events often increase your financial responsibilities, and your current coverage might not be enough to actually protect your family's new reality that they're living in. Don't wait for your renewal date to make changes. Always be reviewing your policy, reassess your income and debts, and consider what you need to increase your coverage or even add another term policy. Now, one of the other considerations that a lot of people give is actually outliving your term life insurance policy, and believe it or not, that's actually a good thing. And the reason I say this is really just as corny as it might sound. It means you've stayed healthy throughout that time, and of course, you're much more financially secure. When that term ends, your coverage simply expires, and you stop paying those premiums. If you've built up savings and no longer need the protection, there's pretty much nothing more that you can do here. If you still need some coverage, maybe to bridge a few more working years or cover final expenses, always apply for a new policy or convert part of your original term into permanent insurance if your provider allows that. Either way, the goal here is to basically use term insurance as a temporary safety net while you build your wealth throughout your life. Also, you don't need to get your insurance coverage perfect on day one. What really matters here is that you start early and then update your policy as your life evolves and changes. You, of course, can always add new term policies later, especially if you're staying healthy. Think of it like building blocks. You basically cover your needs today and then layer on more coverage as your income, debts, or family situation grow. Term insurance is super flexible and affordable, which makes it really easy to adapt over time and make changes to it. Don't let the fear of making the wrong choice stop you from protecting your future. Now, one of the most common questions I get from people is, what's the best place to go and get term insurance, and how do I get it for the cheapest price possible? In my opinion, one of the best places to look for this is something like StateFarm. If you guys use the link for StateFarm with link down in the description, it should take you to a page that looks something like this. As you can see, the current product that we're looking at is auto. Let's say for this instance, obviously, we want to switch over to the life insurance option. Once we switch over to that life insurance option, we'll then choose which state that we're located in. My instance, I'll go ahead and say that I'm located in California. Once all this looks good, I'll hit the start a quote button, which will then take me through their guided step-by-step setup to get me started with a quote for my life term insurance. As you can see, I can start the quote here by either selecting a term or getting a guaranteed issue final expense if my age is a little higher. You can hit the start a quote button, and it will walk you through basically the steps of actually getting this quote and getting a great price in the process. You just have to answer a couple of these very easy questions here: yes or no, male or female, typical questions you would answer on any other type of sheet. And just like that, you'll be able to get started with your term insurance immediately. If you guys enjoyed this video, make sure to leave a like and subscribe so you don't miss any of our future videos. Thank you so much for watching, and please remember that the links down in the description are affiliate links, and we could earn a financial benefit from them at no extra cost to you. Hopefully you guys enjoyed, and I can't wait to see you guys in the next one.